President Donald Trump has announced US tariffs on most of the countries in the world, and it has created some shockwaves all around the world. Stock market has dipped over 5%, which is equivalent to what happened in March 2020 during COVID. Experts are predicting a global recession as we speak. I'll be talking about how this will affect the Australian residential market as a whole, so stay tuned until the end as we will be talking about which states to watch out for. While the immediate impact on tariffs will be directly impacting the US importers, it will have a global impact to the suppliers as the importers will negotiate very hard to bring the prices down. Current tariffs equate to an average of about 25%, which is in line with the tariffs imposed in 1909, which is over 100 years ago. I don't think the Australian tariffs of 10% will have a huge impact to the Australian property market. But the China-US trade war can have a severe impact to Australia. China is Australia's largest buyer for our exports, and we are exporting $152 billion to China every single year. Main exports being stones, iron ore, and minerals. If you look at the stats of China GDP has risen exponentially until COVID and has been flatlined for the last 4 years. However, Australian exports did not have an impact at all. Reason for that is, right after COVID, China started building cities to ramp up their economy. And Australia supplied the required iron ore, minerals, and stones for these projects. This will not happen this time around. If the GDP of China declines in the next few years, Australia will have a hit to our economy. China, being an innovative nation, I'm sure they will come out of this. Whenever there's a global recession, historically, Australia has eased out the interest rates. Experts have predicted a 0.5% rate cut in May 2025. And if there are further rate cuts in the next 6 months, borrowing power of people and money flow for purchasers will be far greater. If there's a hit to the GDP of China, Queensland and WA will be the first to hit in the Australian residential markets. And Melbourne and Sydney, which have been stagnant for the last few years, have a tremendous potential for growth. SQM research suggests that if there's a 1% rate cut in the coming year, Melbourne and Sydney can expect 9 to 11% per annum growth in the next couple of years. Australian real estate has been a blue chip asset class for a number of years, and it seems to be the case amidst world turmoil. Feel free to drop a comment below on what you think, and please don't forget to subscribe to our YouTube channel to watch more educational videos.